So what does the data actually show us, and what's driving the drop in foreign investment into China?
I think what you're seeing is in a continuation of last year's really weak numbers. We saw there was a record low, it was like about a 30-year low last year in companies putting money into China. And this year you're seeing a continuation of that. Basically, yields are obviously much higher in the US and other developed economies than they are in China. The Chinese central bank is cutting rates now. And so if you're a foreign company, you're looking at a weak Chinese economy, you're looking at growth, it's not even going to be 5% this year, it's only about 5%. And then you look across the Pacific to the US where you can get 5% just for having your money in treasuries, you see a better investment environment. So companies are taking their profits and they're moving them offshore. And then you're also seeing a lot of foreign companies, especially in the car space, are pulling out of China or cutting back their investments in China because they're just not able to compete in the Chinese market against companies like BYD anymore. So you see Mitsubishi pull out, where you saw Honda was cutting back, Nissan is cutting back, Hyundai is cutting back. A lot of the foreign brands which were doing really, really well in China until just a few years ago are now really pulling back on their investments there, and that's also driving driving these numbers and this drop we saw in the second quarter.